Morning, Steve Free in Chicago with the morning grain comments. Markets are mixed overnight. Wheat's up, corn's about unchanged, and beans are down a little bit. I think outside markets are trying to hold current levels, waiting for a deal with U.S. And China, watching the economies around the world, especially in Europe with Brexit and China, and then wondering if that will filter into the United States. Also, the United States is talking about no interest rate increase for at least the rest of 2019. Tuesday is usually day-to-day as far as the ags are concerned, as far as exports. We've got wheat 6% behind a year ago. USDA is calling for 7% increase. So probably wheat exports are too high right now, the USDA numbers. Corn is 23% ahead. Last week we were 26, and USDA is calling for only a 3% drop. So I think that in general, the big question as far as the corn carryout is concerned is, will China come in and buy U.S. corn and help corn exports and bring the carryout down and help prices? Soybeans are running 30% behind. USDA is calling for a 12% decline. And again, I doubt if there's much new China demand if there's a deal. And we're running behind, so that could raise the bean carryout. Down in South America, you've got the Argentine harvest just beginning in the beans and corn. Brazil's about 68% down in their beans. It's kind of interesting to be watching truckers down there calling for a strike because the freight changes were not implemented by the new government. So far, it looks like crop numbers are clear or near what the USDA is saying, which adds supply to the world, especially Argentina beans and Argentina corn. As far as U.S. crop progress and conditions, Kansas crop is still rated 52% good to excellent. Oklahoma jumped 14% to 74% good to excellent. And Illinois is 41% good to excellent. Arkansas 32%. So a little bit of wet weather there, bringing those conditions down a little bit. We've got 38% of the Texas corn crop planted versus 31 average. So in general, you've got soybean nearby beans above $9. Supported by a little bounce if there is a deal. And I would think that most people think fundamentally beans are worth something below $9 because of the large global supply of beans. Corn, we're up against the 380 area in corn. A little bit of farmers selling, but for the most part, 385 is the key area in May corn. A lot of people think we'll trade over that. If there is a China deal, also, the wet weather continues in the Midwest. It could slow the beginning of the planting season. And the funds have a record short in corn. So all those things could help the corn market inch a little bit higher. We still think, though, the closer you get to 390 on the May, the farmer will be an aggressive seller of his not only old crop corn, but the corn he's yet to plant. Wheat is cheap, but the fundamentals are mostly negative. And so you've got a bigger world crop in 19. Versus the fact that wheat is trying to compete as a feed grain, and it's just a little bit oversold and still cheap, especially if the CRB index and energy prices continue to move higher. Weather-wise, we've got some more rain coming in the Midwest. The 30-day outlook is wet, and that's not good for spring planting or some of the flooding that's going on, especially in the western Midwest. And as far as the funds are concerned, they continue to be short. We got them estimating them to be short about 60,000 wheat, 230,000 corn, almost 60,000 beans, and 25,000 meal. And again, that could be a supportive feature if something bullish happens in the marketplace. So we'll just kind of watch the choppy, low volume trade until we figure out if there's a deal between U.S. and China. As always, these are my thoughts and not those of ADM or ADM Investor Services. Have a safe and profitable trading day.